Hello traders, it's 8:02 a.m. Chicago time on July 7th, 2021. This is episode number 2029. Thanks for joining me this morning. Again, derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Looking at the pre-market summary sheet as we do every morning, we see that the results are quite mixed today. There's a push in the treasuries. We see the 10-year note is up 11 and a half big ticks. The 30-year bonds are up a handle in 8 ticks. That's quite a bit for the bonds. And the Eurobond is up 46 euro cents. And overall, there's an allocation to the treasuries. We saw the treasuries go up parabolically yesterday as the equities dropped despite big strength from Amazon. I think who carried Amazon and Apple yesterday. There was a lot of divergence between the NQ, the techs, and the other indices. And what we're seeing today is further new highs in the NQ, pushing up 84 and a quarter points, up 0.57%. With the S&P slightly higher. The S&P has come off of its earlier highs. It's still lower than where we were yesterday. Yesterday's overnight high was 43.48. This morning, 43.45 and a half. So relatively weaker, the S&P to the NASDAQ. In fact, everything to the NASDAQ's relatively weaker. We're seeing strength out of Europe. The DAX up over 1%. We're also seeing that the overnight inventories in the S&P are at a high level. At the long inventory at 89%, with 162,000 contracts traded and 20 and a quarter points of range, which is about very close to what you see at the bottom there, the 252-day range mode, which is the most common at 23 points. We have 20 and a quarter this morning. So overall, looks pretty promising for this session. Looks like there's likely to be a fair bit of movement. Let me turn down these news feeds, just a lot of chatter. So that's the overall picture coming in. Crude oil has been trading pretty much sideways. Crude reached a peak of around $78, has pulled back to 73 and is a little bit up today, up 55 cents. Gold again climbing after taking a pretty decent dive yesterday. Gold moving exactly inversely or a mirror to the treasuries. Silver the same. So overall, we're seeing a fair amount of reallocation and movement, and I think that is likely, I expect that is likely to translate to pretty decent movement in today's section. Overall, though, it is mixed because we have some indices up, some indices down. We have the treasuries up, we have the metals up, we have pretty much everything up except for the U.S. dollar, the euro, the yen, and so on. And to me, that is a mixed bag. So it seems like there's potentially a battle here, and then wherever there's a battle with the long-term participants, there's opportunity for the short term. Think of them as the big whales feeding and us as the fish underneath, picking up whatever falls from their big movements. So that's it. There's chatter about the COVID Delta variant. This morning there was news in the U.S. that most cases are showing up in hospitals in the U.S. In the U.S. are showing up with the Delta variant, and it's spreading very quickly as anticipated. So that's kind of top of mind. Also, inflation. Europe predicts inflation for 2022 and 23. Actually, for 21 is expected at 1.9%. For 22, expected at 1.4%. Again, the market's always watching for growth and inflation to drive prices. So that's where we stand there. I'm not going to go through yesterday's chart. I'm eliminating that segment after a lot of discussion, as it's not really useful to what's going on today. What I'd like to focus more on is what's going on today. And so that's what we're looking at currently. So the review segment is going to shift from going over yesterday and what happened and all that stuff to the fact that yesterday's plans did not work at all. And I think that's sufficient to say. The secondary scenario is closest. The secondary scenario was to push up, squeeze through that 48 high, and then push down into 43 to 30. And what the S&P ended up doing is driving down. It's like an open test drive, really. And then squeezing lower into almost 4,300. So it ended up taking out the gap that was created on Friday on the non-farm payrolls. It ended up pushing into Thursday's range, and it ended up holding. There's a single print right here. You can see that 43.03. It ended up holding above that single print and turning at 45.05. Consolidating pretty well here at the low with a higher low. This is I received several warnings, and I issued several early warnings to shorts in the Convergent Trading chat room, the Head Trader channel, that ended up actually rolling over and falling. But this one here was quite clear. It ended up chopping around right when we were having our AMA session. It ended up chopping around, and then we had an impulse to the upside. This impulse was the largest of the day, and from that point on, as soon as we see that, the shorts become either very structured shorts with a tight stop or scalps, and so it started to squeeze, and what we ended up doing is pushing back into the upper distribution of Friday. Friday had two distributions. It had a morning distribution, then a break, and an afternoon distribution, and we ended up breaking through, taking out all the singles on the way down, taking them out on the way up, and pulling back to the upper distribution to build another high distribution. However, this tail here on Friday remains a factor. We're currently trading at 43.39 at the tail that was left behind from yesterday's open is interesting, because to me that looked like a very clear excess tail, which I didn't expect. However, we ended up pushing and pulling back, and as I said yesterday, the techs were very, very strong coming out of the gate. So if we look at the Fangman Plus stocks, this chart is comparing the open. You see Tesla getting hammered right off the open. Right off the opening print, Tesla was down 3%. But Amazon, with the new CEO in play starting yesterday, traders in Amazon really liked the fact that Bezos is stepping down, and that stock pretty much carried, given its market cap weighting, carried the NASDAQ up in the morning while the S&P was going straight down. If you compare charts, if you compare the NASDAQ S&P chart, there was a clear divergence. So with Apple also pushing higher, immediately 2% up, Amazon is pushing 2.5 plus right off the get-go, and then Tesla pushing down. It created this environment that was difficult. It was difficult to get heavy on the sell side with these big tech issues kind of moving up. So it kind of thwarted the overall effort to get short yesterday, although the short side is very clear. We left the open above us. We broke through. We created a nice opening swing low. We pulled back to VWAP here and created an inside bar before the break lower. So that was the only real clean, clear setup right there early on. The delta ended up negative, but we also ended up negative on price. We ended up finishing, we settled at 34. We finished below the open with a delta below the open. So yesterday's movement really had good participation on volume on the delta, on the aggressor side, as well as on price. Here's today. Today we have a multi-distribution profile like the pre-market summary sheet showed. We sat sideways during the Asian session. Europe comes in right in here, pulls back to the full session mid VWAP, and then immediately shoots up. So overall, the trend in the overnight session was positive. We're holding above full session VWAP, full session mid. We're right on top of the overnight point of control, and we're opening just on the upper range of yesterday's trading. So we're above yesterday's upper distribution. We're above yesterday's closing price or settlement, and we are pushing into where we were in the previous session's overnight session. So you could see the point of control from the overnight on prior to yesterday's open and today's are pretty much in line with each other, trading the upper distribution of Friday. To me, this is a market that's not willing to give up higher prices. It is not done. It is just not done. Although yesterday it looked really good for potentially starting some repair work and pulling back, to potentially to 41.72, the big balance point, which is 150 points below us. But no such luck. We are back. We have a V bottom yesterday. This is clearly a V bottom. We are back, and the shorts got squeezed, and we are now pushing up against the all-time highs. All-time highs being 48 in the overnight session, 47 in the day session, and we're not giving up that room yet. So if you're looking short, there's nothing wrong with getting short depending on your time frame. If you're a swing trader, getting short is a precarious business. But for short-term trades, shorts are not bad, especially if the market opens, leaves the open above us, and starts breaking to the downside with rotations expanding to the downside. Of course you get short. Why would you get long that? And look for good structure below to scale or potentially take the bounce. But overall, the market's not giving up these higher prices. The theme continues in the same direction. It's just not rolling over. What's going on here? This is the day session profile. Why is it set to that day? 1 second. Let's switch this to a proper day session. This is a day session chart right here. Each bar represents the cash session. Remember, I'm switching from a pit session, which doesn't exist anymore, to a day session, which is in line with cash, 9:30 a.m. Eastern till 4 p.m. instead of 4:15. So all the future stats, all the constructs, the statistical historical probabilities are going to be built around this new session that is in line with cash. Makes total sense. Finally, the futures are in line with the cash. And as you can see here, we left what looks like an excess yesterday. We finished red on this bar, and we ended one-time framing to the long side. So we are in what I would call a neutral stance coming in. The issue here is that we're not giving up, as I said, we're not giving up these higher prices, but the one-time framing, which has been positive all along, has been positive since the low that was put in a couple weeks ago, 3 weeks ago, was disrupted yesterday. So we have to see, do we trade. Do we trade inside of yesterday's range and break to the downside? If we trade inside and break to the downside, it can very easily get back to this 41.72 that I mentioned, this point of control, the balance point below us. And this would set off one-time framing to the downside, and potentially one-time framing will end on the weekly to the upside and go neutral as well this week. But that's more wishful thinking. We're likely to continue to grind up. It is not giving up these higher prices. And overall, we had good range yesterday. We had good volume yesterday. But overall, the market snapped right back to where it came from. Let's take a look at what's expected for today so all of you can move on. All right, here we go. Stock zones, master levels. And here we are. So what are we looking at for today? Today, again, we are opening around the overnight point of control, above mid, above VWAP, up against the upper end of the range from yesterday, in the upper end of the range. On Friday, if you look at the volume up here, see this? What's in the box? See that low volume node coincides. We're back in this box here. So I'm expecting, because of that, I'm expecting an open auction in range. I'm expecting an attempt to dip, but overall, in continuation with yesterday's rejection and rally, the expectation is the trade is likely to be facilitated more easily to the upside. And so I'm looking for it to gyrate at the open, kind of test that VWAP, test that mid, and then push higher, and then squeeze the overnight high for the overnight stat. So I'm looking for 45.50 to be taken out, this 45.50, okay, to be taken out. And then I'm looking for 47 to be taken out. And then we have some size at the 50. So we're looking for a consolidation up there. But overall, I'm looking for a squeeze into 54. So 50 gets into play. I'm expecting upside play today. I'm expecting it to be bullish, again, for the reasons provided. We tested below. We found buyers. And now we're back to testing higher and looking for sellers. And in order to look for sellers, you got to keep advertising prices higher and higher and higher until they show up. Yesterday they showed up, but they ran for the hills very quickly, which leaves us with more buyers, more people needing to cover. And so I'm looking for a range of approximately 36 to 54 on the day, before the market kind of slides sideways and holds steady around the 50-ish area. That's the main scenario for today. Secondary, open auction, attempt higher, impulse down, consolidate at this 36, 35 area. And if it falls out of this box, and gets below this low volume node, and yesterday's settle, which is at 35, 34, 35. Once it does that, I expect it to hold this area down here, come back and consolidate. And this will be just a resting day for the next rotation, which I still expect to be to the upside. I'm not a perma bull. This is just what I'm reading into the action. So today we're opening in range. We're opening in balance. We're opening against all-time highs. The expectation is both sides will fight it out because, hey, it's near all-time highs. Want to get out of my position or establish a new position short. That's likely to be tested, but the squeeze is likely to be to the 45.50 overnight stat, which rests at 97% probability that 45.50 or 25 and a quarter are likely to be touched. I'm willing to bet the 45.50 gets it. And so this morning I'm looking for any sign of the market hitting the bid but not getting anywhere, and catching shorts offside. So I'm looking for hitting the bid, building a fat footprint or a fat interaction, and then it's not able to move lower. look for, lift the bid, go to market buy, look for those participants who are now trapped short to lift into 45.50 as the first exit, and then hold steady for the 50. The 50 is likely to be challenging, and then look for the 50 to break into 54. That's the key idea for the day. Okay? Good luck, and I'll catch you tomorrow morning. Take care.